A tale of two different markets. In the U.S., central bank policy based on some of the original Dodd-Frank classified certain securities as high-quality liquid assets. So if you had requirements to hold them, they were treated in a beneficial way with respect to what their collateral value is pegged at. Well, Munis didn't have that classification, but they now do. So they're going to be a more favored security. What are your thoughts on what may happen in the muni market post that reclassification, Peter?
I think short term we'll actually see some bullishness in the muni market. We'll see munis do fairly well. They've been a little bit weak year to date, partly because of treasuries, partly because of tax reform. I expect that this will produce a short-term boost that should actually help munis over the next 3 to 6 months.
You know, and when I look at what's going on with munis, it's exactly the opposite that's going on with the Italian paper. The ECB owns a lot of it, and they give full collateral value to it. But that's not the real value. What we're seeing in the markets now is the real value. Contrast that with what's going on with munis with respect to how highly it's classified and what that may mean for owners such as French investors.
Yeah, I think these things take time to play out. So we're in the muni phase, the initial phase where, hey, this is now a more acceptable product, people can own it. That already happened for the last 4 or 5 years. We've seen yields compressed in Europe, where there's really very little differentiation, or there was very little differentiation between Italy, Spain, and Germany. And now you're seeing that spread really decompress, and it should. So it's kind of outstayed its welcome, and I think that's going to be something we have to adjust to. And also, even in the U.S., one thing we've seen over the last 3 or 4 years is policy pushing towards passive investing. Right? A lot of policy has been created, particularly in your RA 401ks, to really push passive investing. Are we creating that same sort of problem?
Right. No, you're exactly right. So passive investing dictates that certain areas, sectors, certain spaces are blessed. Winners and losers are picked with respect to big policy decisions. Now, what do investors do in the States as they see German yields move down in a flight to safety, pushing our yields down? Are those distortions going to make Mario Draghi and Jay Powell's missions more or less difficult or more difficult, Peter?
I think it's going to make it more difficult. I think Powell's already been too aggressive in terms of the number of hikes they're planning. I think the market's pricing in between 2 to 3. We at Academy Securities really think it's only going to be 1 to 2 more hikes, and I think the situation now going on in Europe is going to solidify that view. They have to be cautious. For better or for worse, we've dug ourselves a deep hole where we've relied on policy to support markets, to support prices for so long. We cannot just take that away quickly. It's going to have to be a very, very gradual return to normal.
Now, finally, all this doesn't seem to have even slowed down what's going on with the rise in the dollar. Now, I know the dollar index isn't the definitive measure of its value, but it is widely used. In your final thought, how is the strength in the dollar going to continue to affect the situation of pricing not only in Italy, but other emerging markets as it gets more pricey?
I think not only does it hurt other emerging markets, I think it's doing a damage against their own policy, right? Trump administration really wants trade, and part of that policy had been to weaken the dollar. They've been very successful at first, and this dollar strength, I think, is annoying the White House, and I would expect us, again, to have to ease back on rates or something, because it's just defeating the purpose of building trade, which is what the White House wants. So whether you agree with it or not, I think this... go ahead.
Yeah, no, and what's even more interesting is, as the rates in Europe, with Bund yields now approaching 30 basis points and minus 70 plus on the 2-year shots, how is that going to affect what's going on with respect to not only issuance as our debt keeps rising, but how's that going to take away the room for more tightening should they go that route, and the inversions of the curve? We already see 7s and 10s almost touching sometimes.
Yeah, I think it's a real dilemma, because now in Europe you either have to buy Schatz, which are, as you said, yielding negative rates, which is very unattractive, or now you have to invest in 2-year Italy, which is suddenly attractive yields, but a very, very scary piece of paper to own. So it pulls us over to the U.S. Again, I think we have to be a little bit accommodative. I think we are going to see our yields, especially in the belly of the curves, the 2 to 5 year rally. I don't think we're going to see much at the long end of the curve, because that's been overbought already on the hopes of a policy mistake. And as there's a sense that Powell might have to be more cautious or more dovish, I think we'll see that long end of the yield curve not perform particularly well.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.